Welcome back, everyone. Today we're going to discuss a little bit about different types of taxation for different types of income or assets. I'm going to do it specifically to do with crypto, but we'll talk about a bunch of other things as well. So it comes from some comments that we had on some of our other videos asking a little bit about the taxation of NFTs in Portugal. So I'm going to cover Portugal, but I'm also going to cover, a bunch of other countries and kind of give you a sense of how to think about the taxes in different places, okay? I've done a little bit on this in the past, but these are kind of some specifics that could be really useful for anyone who wants to relocate to Portugal, or as well some other places, because there's a little bit of a nuance here that I'm going to cover. So before we do that, if you haven't already, please smash the subscribe button, nail the notification bell. Really appreciate you subscribing. If you're interested at all in these subjects of international structuring, you can check out our websites, offshorecitizen.net, offshorecapitalist.com, or you can send me a message, Michael, or calendly.com/Michael-Rosmer. And for something a little bit different, if you're interested at all, I have another channel that we talk about, world issues, etc., called the Solutions Podcast. You can check it out as well. Okay, so the question that came through in the comments was one about, hey, if I have NFTs in Portugal, how are they taxed? Okay, now, in general, when we're looking at these things, this is like a useful lesson on types of income. And one of the things that's super interesting and useful here for you is that often you have some flexibility in terms of how you characterize your income. So a good example of this is people in SaaS businesses. Sometimes a SaaS business might be considered a royalty, right? Maybe you're paying for a license or something like that. In general, in software, you might be paying for a license. But you might also characterize it as a service or a product or something like this. And that has fairly different tax consequences. So the noteworthy example of this, of course, is royalties versus regular income, all right? And so I'm going to touch a lot on that in this video, but I'm also going to go through a few other types. So let's just kind of to set the background for the types of income that you might have to deal with. You have regular earned income, okay? That's one type. Then you have capital gains. This is where you buy something and the price goes up and then you sell it, right? And there's an interesting crossover between those two. Then you have dividends, which is where a company, which is typically paid tax on that money, although it could have been subject to tax if the rules were allowed in that way, but it wasn't necessarily. So that's dividends, right? Then you have royalties, and royalties can be kind of a whole different thing. And then maybe you have interest, and then maybe you have some other different variations on this. Okay, so interest usually would be kind of like earned income, but sometimes could be considered a little bit different, or because of the fact that you have withholding taxes. So you've got, and then you might have what they would call director's fees or technical service fees. And so sometimes for withholding tax purposes, those could also be different. Okay, so what's the deal here? The deal is if you look at royalties, interest, dividends, capital gains, if it's in the situation where you have real property, maybe rents, okay, maybe director's fees, and maybe technical service fees, you could be subject to withholding tax, okay? In other words, they may consider that income is local to wherever it is that we're talking about, and therefore when you get paid foreign, so this is not really relevant if you're getting it locally, right? If you're in a country and you're earning money in that country or the source, then you don't notice this. But when we're talking about international tax, this could be really important because let's say that I'm earning royalties from the US, then there's withholding tax on that. If I'm earning interest from the US, there's withholding tax from that. If I'm earning dividends from the US, there's withholding tax from that. If I'm in some countries and I'm doing technical service fees for clients there could be withholding tax from that. If I'm a director for a company in that country, there may be withholding taxes for that. If I have property and I sold the property, there's a capital gain, there may be withholding taxes for that. And if I'm in a situation where I'm earning rent, there may be technically not withholding taxes, but it'll be taxable at source, which I guess also we could throw partnership income in there as well. If you have a partnership and there's local business, then there will typically be, it's taxable at source and then sent to you. Okay, so we've got all these different variations that are in a box there. Now, at the same time, on the receiving end, they may also treat these differently. So for example, it's pretty common that in a lot of places, they tax royalties differently. And I'm going to use Portugal as an example because we talk a lot about the Portuguese NHR and a lot of people going there. And we talk about, how do you structure for if you go to Portugal to potentially pay no tax, etc. Well, you've got a few different options in that regard, right? One of those options is you could be earning, doing a profession that adds high value and you get 20% tax and, some things like that. Doesn't work out that great for you, but better than paying normal tax in Portugal. Then we've got foreign dividends, right, which are tax-free. We've got pension income, which is taxable at 10%. But one of the ones that people don't talk a lot about, but is really good, is royalties. So if you, for some reason, are somebody who can earn royalties income, that could be zero tax in this situation. Now, also interestingly, under some of the tax treaties, you will have exemptions from this in other parts of the world. So for example, one of the ones, I'll do a video on it at some point in the future, but there is no royalty withholding tax between the US and Hungary. So if you're licensing something out in the US from Hungary, there's no withholding taxes. Amazing, right? So you can avoid that tax. That could be really useful for you in certain circumstances. Why I wanted to bring this up in this context is if we're talking about, say, NFTs, and for those of you who don't know, I've done some videos on what NFTs are, a particular type of crypto, but often you can produce NFT art, you can produce NFT books, you could, and there's different ways that one of the value propositions of doing that is you could get recurring royalties each time it's resold and things like this, right? So we say, okay, great, well, that's kind of interesting. How about beyond that? Well, what's the key here? The key is, if I make the NFT, okay, so my job is to make it, and then I sell it, what type of income is that going to be? That's not going to be royalties income, that's going to be earned income, so that's going to be taxable in Portugal, right? If, on the other hand, I bought an NFT and it goes up in price and I sell it, for the moment you could probably get away with saying that it's crypto and you could maybe make it not taxable. Likely in most scenarios that's going to be a capital gain, okay, so it's basically like buying and selling art, and so as a result it would be taxable as capital gains. But if you can argue, hey, listen, my job is to produce these NFTs, and I'm selling like the licensing rights, right? And there's various ways that you could do that, or maybe you're getting a royalty each time it's resold, then that royalty might not be taxable at all, right? So each of those is a different scenario, and how you plan it out can make a big difference. The other thing that you can, of course, do is you can put the money into a company, or the assets into a company. You could say produce NFTs for the company could resell them, then the company earns profit, and then the company's going to deal with its own profit, or its own tax, and then it's going to pay out dividends, and those dividends might not be taxable to you. So that's a little bit of a different scenario as well. Now, that's kind of the basic thing. What are some other things that are kind of interesting here? Capital gains sometimes are taxable in different ways. So you maybe get an exemption if you've held the asset for a long enough period of time. If you go to some place like Netherlands, you have crypto is, they have these boxes, right? And so basically they do kind of like a wealth tax. And so it's based on the value of the asset rather than on the profits in the asset. And what this means is if you have really high gains, that could work out really good for you, right? If you bought it for $1 and it goes up to $100, you're taxable as a very small percentage of the total asset value, as opposed to on that 100x, which is great, right? It ends up working out pretty favorably for you from a tax standpoint. Now, you also pay that when it's going down, so it's not necessarily so good in the other direction, right? So it depends a little bit where you are, which works best. But the thing that I want to impress upon you in this video is just, okay, which type of income do I have, and can I change my type of income? Okay, so can I say, okay, I'm going to categorize my income as royalties? And maybe I'm not. Maybe I'm in another situation where I don't want to do that because of withholding taxes, like I said. So maybe I'm going to categorize my income as earned income. Maybe I'm going to see, sometimes there's times where I can work it that I can consider it to be capital gains, right? So generally trading income is earned income, right? Generally, not necessarily, but generally. Generally speaking, if you are doing something and you're getting paid in the form of whatever, it's earned income, okay? Generally, if you produce something and then it pays out over and over again, that would be typically royalties income. If you own something that's paying you a dividend, then that's typically dividend income. And then if you're lending something out and getting paid, then that's typically going to be interest income. And each of those have different consequences. They might have different withholding rates. Again, going back to another example in the US, you can have something called portfolio interest, where basically if you're acting as a general loan portfolio, you can avoid having withholding taxes on interest. So that's very interesting. Canada, although they technically have some, if you read the tax treaties, you'll see withholding rates. In practice, if it's at arm's length, they typically don't charge interest withholding. So again, kind of interesting. So these are ways that you can relocate income in a tax favorable way just by recharacterizing the nature of that income. So anyway, that gives kind of like a basic overview. this topic, really is very person by person specific. It depends on the country, right? What makes the most sense for that country? It depends on your circumstances, what you can do, because of course you can't always say, hey, this is royalties income, or you can't always say, hey, listen, this is capital gains, etc. But if you can, this is a useful way to be able to kind of optimize. And I think going forward, there's probably going to be more and more opportunities to play with these rules to get optimization in creative ways. So wanted to bring it to your attention. Anyway, I hope you like that. If you like it, give us a thumbs up. If you have questions, put them in the comments below. If you have something that you'd like to see, please let me know. And I'm going to look forward to seeing you guys on the next video.